Dear ladies and gentlemen, I'm delighted to welcome you at the annual event of the blockchain team at RBI, our Blockchain Night. In today's fast-moving world, customer expectations are rising, and to provide superior service to our customers, we have to continuously adapt, innovate and embrace new technologies. Only by doing so, we will achieve our vision to become the most recommended bank. The disruption that started with Bitcoin in 2008 has turned to have broad implications. The underlying blockchain technology is expected to affect and transform many areas, including areas where we as a bank operate. One of these areas is payments. First use cases of new business models such as pay-per-use and machine-to-machine payments are already appearing. Blockchain-based payments are also showing potential for cheaper, faster and more secure cross-border payments. While the blockchain technology doubtless brings many new opportunities, it also entails new challenges. As with any other new technology and its application, there are still a lot of challenges to be resolved, especially of regulatory, compliance and technical nature. But fortunately, it seems that the technology of analytic tools is advancing fast and helping to address some of these risks. With this said, I'm handing over to the experts and they will provide you with deeper insights on these topics, pointing out both opportunities and challenges. Thank you all for joining RBI's Blockchain Night, and I wish you an entertaining and informative evening. All the best and thank you for joining.
Thank you, Mr. Lenk. Great intro to this event and looking forward to all this content. It is my pleasure now to welcome Christian Wolf, Head of Strategic Partnerships and Ecosystems at RBI in our studio. Christian, very welcome.
Thank you for having us again.
It's always a really pleasure for me to host these events with you guys. I'm always impressed the work, the depth of the work that you're doing here, and the topics that you choose are super relevant. We're also in our editorial team coping with all of these topics, talking to lawyers, talking to experts. Why did you choose these topics this year? Payments or also regulatory structure around the cryptocurrencies?
I think as we were chatting before the event, I told you it's yet another year, right? And this year passed so quickly, not just in a felt way, but also if you look out there, what's happening in the industry. And there had been so many exciting things happening in that industry. We have just recently seen the first ETF proposed on the US market. We have seen also, on the other hand, China banning most crypto operations. We have seen El Salvador introducing Bitcoin as a means of payment and all the things. So this certainly raised a lot of questions within our bank. How are these developments of relevance to us as a bank? How should we cope with them? What are the questions that come along with them? And these are exactly what we deem the most appropriate questions that we need to resolve, namely those in the regulatory and compliance environment, but also those questions that where the technology promises to disrupt the payment rails as we know it. These were the ones that we saw most prominent and why we put them on today's agenda. And I'm quite happy to have a very renowned panel of experts discussing with us and having different viewpoints, pros and cons.
And a very broad audience, to be honest. I think we have approximately 400 or 500 applications for this event. Do you feel that the topic is becoming to be even broader? Do you see that or feel that also within your group?
I think it's twofold. The one is, of course, media coverage when it comes to the cryptocurrency markets. That's very, very visible, let's call it that way. That certainly raises a lot of interest. But especially when it comes to crypto in general, there is a huge invisible part of the market, namely technology itself and a lot of other important use cases that are not directly connected to Bitcoin, for instance. And we see that in our audience as well, this need for information comes along with a higher maturity level as well. So we see that people get more and more educated on what's happening out there in the market. they get more and more insights on how the technology is working, and as such are also raising actively questions. And I think this format is a perfect one to address these questions and to have them discussed publicly.
And I'm very happy that you're addressing questions which are not so likely to address, being the illegal part, potential part of these cryptocurrencies. I will be discussing this with really excellent panels that you were able to put together. So thank you for these first words. We'll be giving some insights on the RBI Blockchain Hub later on in the discussion. Certainly. And we can now move to our first panel. We will change the setting now. And Christoph Lehner, Head of Group Compliance at Raiffeisen Bank International, is waiting for me at the other part of the studio. And let me use the time to also announce the other speakers for this panel. Caitlin Barnett will be with us, Director of Regulation and Compliance and Chainalysis. Christian Steiner, Regulatory Affairs and Compliance Officer of Bitpanda.
In the last couple of years, we have witnessed the rise of cryptocurrencies. Despite increasing interest, many are still skeptical. Their main reason for concern is that cryptocurrencies can be used for illicit purposes, such as money laundering, ransomware attacks, scams, and more. But is the blockchain world really so untransparent, untraceable, and anonymous, and therefore well-suited for criminal activities? Didn't blockchain technology promise complete transparency and traceability? This has not gone unnoticed by regulators, and we have recently seen not only stricter regulation, but also the growing trend of tools that help mitigate these risks, so-called blockchain analysis and compliance tools. So can tools help restore trust in cryptocurrencies and blockchain? And what can we learn from them?
So welcome back. I guess I was too fast to change the setting and wasn't able to finish introducing the audience. So Ralf Riersch is also with us, supervisor, security supervision, specialized in crowdfunding, fintech and crypto assets at FMA. And last but not least, Stefan Domanek, legal expert, prudential supervision, asset management and capital market prospectus at FMA. Very welcome in our studio and very welcome, dear speakers, in our Zoom call. Thank you for being with us. Hi, can you hear me?
Yes, we can hear you.
Perfect. We have a very good topic that we have chosen, blockchain and compliance, friends or foes. Many startups tell me, many crypto startups, fintechs tell me that they are actually in favor of regulation because they need legal certainty. They would like to have, so to say, this regulation. There's a lot of kind of rumors in the space that cryptocurrencies are being used for illegal, for illicit purposes. Give us some insights on that. How do you perceive the topic? What do you think is the current situation here?
The current situation is that we have a pretty unregulated market at the moment. We have neither the regulations from the formal point of view, nor do we have the tools to have complete transparency in cryptocurrencies. So when we talk about transactions, when we talk about all the data from originators to beneficiaries, the entire chain, the assessment of source of funds, we all know the problem of cryptocurrency mixers and tumblers. So there is quite a push on the development side of the business, but all topics when it comes to regulation on the formal side, but also scrutiny, assessment tools and so on the material side are not that developed yet. And this constitutes a certain risk.
Okay. Caitlin, what would you say? Are cryptocurrencies being used to, let's say, relevant extent for illegal purposes, for illicit purposes, or is that just a rumor?
I don't think it's a rumor, but I also don't think that that's the only purpose they're being used for. Chainalysis has done a lot of work and research on this topic. And based on our research, we've been able to determine that 1% of cryptocurrencies are used for illicit activities. And when you look at the overall total market cap for the industry, that's a very, very small number. And I think it's important to remember that fiat currency is also used for illicit transactions all the time. But with cryptocurrency, I agree there are areas where it does become difficult to trace and track. Using blockchain analytics tools like a company like Chainalysis, you have greater visibility into tracing and tracking than you would with traditional fiat dollars.
What do you guys do exactly? How does your tool work?
How does it work? So high level, how I like to explain it, because it is way above my pay grade, how they actually do it. But we are providing real world identities to the cryptocurrency addresses on the blockchain. So we have a dedicated team here at Chainalysis called our Intelligence Operations Team, and we have been able to identify a ton of services, both good and bad, within the ecosystem. We provide that information to our customers in a number of different ways through our products, and then they can use them to conduct transaction monitoring and conduct their own risk-based approach as to how they want to approach cryptocurrency.
And do you work together with banks and regulatory bodies on that? Do you provide these services for them to use it in their work?
Yes, absolutely. So Chainalysis caters to both the public and private sector. On the public sector, we have law enforcement, regulatory agencies as customers within our ecosystem. And then on the private sector side, definitely started more as crypto native businesses. But traditional finance is definitely stepping up to the plate, and they all really want to get involved in cryptocurrency. And so we've seen a lot of interest from traditional financial institutions over the past couple of years.
Christian, Bitpanda is one of the leading European crypto, fintech, or trading investment startups, let's call it that way. Unicorn, obviously, and we started reporting about you guys in 2015. And something that I kept in my memory is that you were always very eager to cooperate with FMA, with the authority in Austria, and you were one of the role models in this context. What is your take on the fact to which extent cryptocurrencies are being used for illegal use? Do you have any data from your platforms? Do you see any illegal activity there?
Yes, thanks for inviting us first. There are many different perspectives in that. What we are really in pro is clear regulation. We see it now with the AMLD5 that addresses one of the first bigger problems. Before that regulation, we don't have that on a global site yet. Everybody more or less could have exchanged cryptocurrencies without any license, without any system, without any okay from a regulator. We saw that quite critical. Even before that regulation, we aligned closely with FMA and always asked before we really started some products. I think this was the right way to go, obviously, for different reasons. Now we see two things. One is that the service providers themselves are getting way more professional, so we see a big step up there. And on the other hand, we see new services within the blockchain environment that really pushes us to different questions. I just wanted to mention two of those that are real drivers there: decentralized finance and also the NFT sector. So we will see how technology evolves to the new regulations and challenges, and how this interacts with what is yet to come. And we see also that the European Union sees the need to address it more clearly on a whole regulatory framework, not only on an AML basis with the MiCA. So we see many different trends there on that side. And on the other side, I think what Kathleen also mentioned is we tend to overstretch the real use of crypto assets for illicit purposes. If you look at also the report from Germany, they made a very thorough analysis on that by the FIU of Germany. They did not find much evidence that it was really used in a bigger scale. So as Kathleen mentioned, a lot is still happening in the normal fiat world, and also that is not as traceable as we tend to think, otherwise we would not have all those.
Maybe it's a silly question, but I don't know whether you guys have an answer to that. But is it easier to do illegal transactions, illicit transactions in the fiat world or in the crypto world? Maybe.
I don't.
Yeah. Go ahead.
I don't think that's easily comparable. So it depends on your setup. So the issue is with normal currencies, you have a multitude of entry levels. So you could go to, I don't know, Cayman Islands and bring it in the system. And then some of your banks where you want to pay it out needs to see and request a proof of funds. So you have a different level of interaction yet. What I think is that it's getting more hard, I can say that, to get your cryptos out if they're really from illicit usage, so ransomwares or other things, because now the tools are really stepping up and you can easily monitor that and where this is coming from. Of course, we have tumblers, of course, we have these issues, but we know all of that from the fiat world as well. So I would not dare to say what is easier to use. I would stay away from both sides, especially from crypto also, because if you ever do something like that, your transaction is publicly registered your whole life. So even if they connect your wallet to that later, they see you maybe laundered money or something like that. Something I would really want to avoid if I would go in that direction.
Ralf and Stefan, both of you guys work for the FMA, for the financial markets regulator in Austria, and obviously have a very broad insight in the financial world, including the crypto world. What's your take on, first of all, the illegal activities in the crypto world? And then I'd be curious, how do you see this new crypto world? As something that you need to regulate more strictly, or is it something that brings new opportunities for the market in general?
So I think I covered the first point, and Stefan is going to take the second one. We should differentiate between different kinds of illicit activities linked to crypto. I think there was a very large wave of problematic issuances in 2017 and 18, where we have good studies showing that a lot of ICOs, ITOs were actually fraudulent. But that is hopefully in the past now, and the numbers are looking much better now. So that is one part of the issue, that you actually have fraudulent crypto business models that actually use crypto. Then on the other hand, there is a large slew of scams that we are seeing that pretend to actually be linked to crypto, but just use it because it's sexy and because people have fear of missing out, and they appeal to the greed of people with very high throughputs and tend to attract uneducated people that would also fall for other kinds of scams. So this is now the new fad that we're seeing, and it's a very large part of what we are seeing when we get complaints in the FMA. So that is also why it's made public by the FMA, because it is an actual threat that is existing, but it has nothing to do with the core technology per se, but more with a fad that the criminals are using at the moment. It will be something else in a few years, I think. And the third part is, of course, the AML money laundering perspective, where maybe the data is a bit problematic, but most of the time people only talk about things like Bitcoin, but there is also cryptocurrencies, privacy coins like Monero, which definitely aren't traceable at the moment, which may be traceable in the future. And from what we saw is also that it is very hard to get those currencies into a compliant environment. And also that is why many players shy away from them at the moment, and why they are also used for illicit purposes. So we have to differentiate very well between different problematic cases here. But I'm also, I agree with the other panelists that I don't see crypto as a scammy environment per se. I think we should be very careful when we say something like that. Okay. Stefan, what's your take on that?
Yeah, I tried to tackle the second question. So, of course, naturally, as a regulator, we are in favor of regulation. Someone already said in the panel that right now only the AML regime is applicable to crypto assets, which is right. In the future, specific regulation is on its way with MiCA. Of course, then the main benefits coming along with regulation will come into place, which is legal certainty. And hopefully we can achieve a high degree of legal certainty, I guess. And
you know, this is what surprised me in the crypto world. When I talk to crypto startups, for example, and companies that are building their products around this technology, they are screaming for clear regulation because they want to have legal certainty. In the startup world, let's say around that, they want to deregulate and say, we don't need that and we don't need that. Do you see that as a positive sign that startups are serious, that they want to be compliant and they want to have the legal certainty for that?
Yeah, of course, it's a positive sign. Nevertheless, it's naturally a young industry like the crypto industry needs a clear regulation to develop itself. And now it's a duty of the legislator and also to some part of the regulator to provide this legal certainty. However, another aspect which comes along with legal certainty is the understanding of the legislator and also the regulator And looking into MiCA, so I guess every panelist has seen the proposal on MiCA. A lot of future topics like decentralized finance are, for example, not covered by MiCA. So that poses a significant problem for everybody involved in the industry. And of course, also speaking as a regulator, I can say that for us, it's a big challenge. We haven't had additional stuff for, I think, the last decade. So we have to deal with these new topics with our existing stuff. The regulation gets more and more also for us. And we are willing to and want to provide the legal certainty. But of course, we also from the regulator side, we need the necessary resources to deal with everything. And only if everything is there, we can achieve that level of legal certainty, which is needed for the Austrian market to develop as a leading location in an ideal world.
Super interesting point and super important point that you're just making. How do you guys build up the knowledge around these technologies? This is not something that you applied for when you entered the job. Maybe blockchain didn't exist at that point. How do you build up the knowledge around that?
A lot of it is private interest. Sorry, Stefan, to interrupt you, but a lot of it is private interest starting from the bottom up. We have a lot of young, very enthusiastic colleagues and employees at the FMA. And also, of course, during the last few years, the FMA has also noticed this trend and reacted to it, and is also covering it on an organizational level. So it is a mixture. It started a little bit bottom up, and now it's getting more formalized. But of course, it's a very tough situation to be in, because we are hiring against the market. So, and as you know how the regulator pays, this is a tough situation sometimes.
So, Christian, they would rather go and join your team than FMA, I guess, at Bitpanda. Tell me, Christian, is the regulatory part of the product, do you see it as part of your product?
Well, there are many dimensions to that again. So yes, I think in general, we cannot leave the regulatory side out of our product and out of our offering, especially when it comes to competition and to what other players are doing. I don't think we will offer regulation for our customers per se, if that is what you meant with that. That is, I think, not what we aim for. What I think where the trend is more going is that we will become more and more regulated. And we see a quite big advantage in that, because Bitpanda quite early decided to go the more regulated way, get more regulatory people on the team, and try to be really up there. And I cannot say the banking standard, but we at least try to go in that direction and have a good understanding of what is yet to come, and be as ready as possible, be as compliant as possible, have as good practices as possible. And that very much paid off. So that was one of the reasons why we also got to Unicorn, because we never had a big clash with FMA, but also no other reputational issue. And because people are always, yeah.
No, sorry, go ahead.
No, I just say people always forget about the other side of it. So if you're not compliant with good standards, also the reputation will long-term be a bad one, and then you might be profitable in the short run, but on the long run, this is not a feasible way.
So it's also in your interest to, let's say, I really don't know how this works, but I would imagine that it would make sense for you guys to have a sort of communication with FMA also on the level of understanding the technology, to help them understand the technology, to help them understand the issues of the crypto world as well. Do you have this permanent communication also on that level to all of you guys?
Well, I would not dare to say I have a better understanding than Ralf or Stefan. So that is just like there are different dimensions and perspectives. So I think both sides are valid, and if there is interest, and also we offer that to other players on the market, we for sure are happy to exchange thoughts, and that is what also happening on some of those panels all around. But I don't think that it's really necessary for us to train FMI. FMI is very up to speed, and also in the international, like if you compare it to other NCAs, we see a very good understanding of crypto there. And that also helps us a lot, because we can then really address the topics we have and not need to start over. So that is much appreciated on this regard.
Perfect, amazing. Christoph, what is the level of regulation or legal certainty that a bank would need in order to involve in this field?
So as a bank, it's probably a bit crucial from my point of view. And why is the risk simply higher as a bank? Because if we just don't stick to the regulations, of course we breach the rules in the same way as any startup company. But if you consider in which way the fine is calculated, it's calculated based on the revenues. And if you look at our revenues, the fines will be extremely high. Yeah? And we have also our solid income base. So for us, it's always, why should we really risk getting a fine when we already have a stable income base? Yeah? So let's probably just monitor it. Let's work with colleagues from startups. But if we are not really sure that we can control the risk, we simply don't do it. And we are currently not in a position that we are fully assured that we know exactly everything that we need to know. On the one hand side, and secondly, we also see when you look at the new EU AML package that there will be also the travel rules to be implemented. So also the regulator sees that there is a need for more transparency, and as long as we don't have those data so that we really can trace it, it's a problem for us. And what you should not forget is, because this was discussed at the beginning, I think we need to differentiate when we talk about criminal activities between the material criminal activities and the obligation of due diligence that the underlying companies need to apply. And that's something different, because I'm not here to fight the world against crime. Of course, we contribute to it, but my main obligation is that we stick to the legal rules. Yeah. And I need to ascertain to the company I'm working for, so RBI in this case, that I can assure it. And as long as I can't fully assure to adhere to all the rules, I can't give a green light.
And what can be done to mitigate these risks of legal breaches or illicit usage of these payments? Are tools, as we heard, for clean something that you would use in the bank as well?
Of course, we also cooperate with certain providers, also with Chainalysis, for example. We do our best, but it's not that I'm very concerned that those steps will follow. We see that there is a trend going clearly into this direction. There is more regulation to come. There is more innovation on the traceability tools, analysis tools. So for me, it's just a matter of time.
And that helps you engage with cryptocurrencies?
Of course.
Sandboxes, would that be something that you'd welcome?
It depends, It really depends on what the field of operations would be and how the sandbox would look like. But of course, I mean, we already experiment a lot because we think that the technology per se is extremely promising, but we don't know how the business per se will develop. Now we also will have a digital euro and other digital currencies. So we don't know yet how it will be perceived, but that's why we currently monitor the developments.
I'd like to welcome or invite our audience to ask us questions in the chat. I will take them. We have 4 questions now. I'll come to them in a second. Just one question to the FMA. Do you use such tools as well? Do you implement them as the banks as well?
Of course, we cannot comment on this in this way, so because we cannot tell everybody our weapons. But one thing that the market has to be sure about is that the FMA is also on the same has the same challenges that businesses have as well, because how can we say something has an illicit provenance if we don't know it by ourselves? So maybe this is answer enough.
Yeah, okay. Caitlin, basically your tool, I mean, this is a very interesting and important perspective, enables the companies to interact and engage with cryptocurrencies. Is that your pitch that you offer to the economy in general?
Correct. So we believe that we provide transparency to the blockchain, and we allow businesses such as traditional financial institutions or crypto exchanges such as Bitpanda to confidently and safely and compliantly interact with cryptocurrencies.
And would you also, from your perspective, nevertheless welcome clear regulation, if necessary, additional regulation to secure the legal certainty?
Yeah, absolutely. I mean, I think, Chainalysis has always been a proponent of regulation. They've been around and have been part of some of the major investigations into cryptocurrency. They were part of the original Mt. Gox investigation. They have been involved with OFAC investigations and providing, information there. So Chainalysis is a huge proponent of additional regulation, and I think we'll continue to see more. I think it'll take some time for the regulations to continue to come up to speed with. This is a very fast-paced environment, so it's hard for the regulators to stay up to task just like the rest of us.
Mm-hmm. I'll take a few questions. Veselin Petkov is asking, in the 90s, there were appeals to ban the internet because of porn. What should financials do in order to avoid the risk but save themselves from disruption? Does anybody feel like answering the question? Or do we all understand the question? So what should financials do in order to avoid the risks but save themselves from disruption?
I think it's basic. Sorry,
No, go ahead,
I think it's basically getting at. I think it's basically getting at how do you enter the market without being potentially shut down. I think we have seen, like we mentioned, China make some aggressive moves here, but in every other country, I think we see regulators adopting this technology and embracing it, and coming up with fair and equitable regulations so that consumers can confidently enter this market and feel protected. So I think the internet equation is a good one. People were scared of what they didn't know, and as they got more comfortable, there was more clarity. So I personally don't see this going away. I don't think we're going to see a ban on cryptocurrency. I think we're going to continue to see adoption and more regulation to come.
And to add on to this, I think it's also not feasible to ban something like this in a developed Western democracy. I mean, you can probably do this somewhere else, but this technology, we simply do not have the means to actually suppress something like this from a purely operational point of view. This is not something that could be done easily. So I think, aside from the fact that I would disagree strongly by myself with a ban like this, I think it would not be feasible to do it anyways.
Great statement.
But I would also not oversaturate on the ban of China. So yes, of course, that was the last message going around from China. But they're also doing a lot of stuff with central bank digital currencies in various big cities in China. And I think also the ban might depend a little bit about what is going on in the mining industry right now, how the market powers are a little bit shifting right now to the United States. So wouldn't over exaggerate on this.
Mm-hmm. And maybe to comment on that as well. So I think two things are very interesting: to see blockchain as a ground technology and compare that to the internet. There was a lot of discussion. What will be the economical benefit of the internet? We don't see any advantages, no growth, nothing. Now it changed, of course. Now we know GAFA and all the other big players in the internet, Netflix, huge companies there. So I think we'll see the same with crypto assets once this is more, I would say, used in a broader sense and in a broader percentage of the people all around the world. So I think that is something that I really like from this example. And when it comes to disruption, I think there are two sides of that. Of course, we will also have in the future banks that will not go away. I don't think these purists who think that DeFi and other things will completely make banks obsolete. I think that is just way too short. But it will be a mixture, and I think it will be more common that banks will handle crypto assets on a daily basis if we look in the future. But the future for crypto assets is always very hard to predict, because a year ago, nobody would have talked about NFTs or DeFi or something like that. So always a very exciting journey here.
I think at that point, I'll take a question of Ed Noland. Isn't the idea behind cryptocurrencies or DeFi the complete opposite of any bank's interest? In terms of regulation and control, the third-party approval is obsolete. Who wants to comment on that?
I can, of course. The initial intention was to be intransparent and not to be traceable. This is also what the word crypto means. But this was the initial idea, and I think that we all see when new tools or new regimes develop, they also need to mature, and that's what's currently happening. And if the system wants to supersede in all dimensions, then it needs to adapt as well, and that's why regulations comes in, which makes it easier for classical players like banks to work with it. So it's kind of like a circle where loads of participants need each other in order to really develop this new regime.
Mm-hmm. There's another.
Maybe just a short word on that, because I don't think if somebody wanted to build an anonymous system, he would have put it live in the internet. There are way better ways. For example, Ralph mentioned Monero, which encrypts every transaction, than the Bitcoin way of things. So if you want to ensure anonymity, you would not do that in that way. And I don't think that was the original use case. It might have gotten in that direction, but also if you look at the white paper in 2008, it was more about the banking crisis, the loss in trust, and the more, I would say, democratizing of finance in the sense of that you could really own your own bank account more directly. So I think, yes, this clash of words in the question is existing, but I don't think it will need to exist in the future. So I think it will be more cooperation than a real clash.
Mm-hmm. Great. Another question ranked to the top, I think for the FMA and maybe the Bitpanda or the rest in the round. Why don't we have working groups bringing together people from regulatory side and people from the industry? Or maybe let me rephrase that question. Do you have such working groups in place?
Yeah, maybe I can answer that. There are such working groups in place. So, for example, within ESMA, within the European regulator, there's, for example, the Financial Innovation Standing Committee, and there is a consultative working group where experts from the industry are continuously discussing with regulators and also with the European Commission on how to move forward. So such mechanisms are in place in various places, to be honest.
And if I may add, also in Austria, we are currently discussing, there's a working group with the Ministry of Finance, FMA, the Financial Intelligence Unit, and the industry to have a subgroup on cryptocurrencies where also crypto asset service providers will be included. So this is about to be established in the next weeks.
Perfect, great. For Bitpanda, I guess.
Maybe yes. One word about this to add on to this. I think it is also, from a regulator side, always hard to invest resources into something that is not yet regulated. So because we have public funds at our disposal and we have to use them according to the law. And of course, in the AML, on the AML side, we have regulation now. But as long as we don't have a legal basis to spend a lot of money on this, this is also a perspective that we have to take into consideration. A lot is being done already. But I think as soon as we get things like MiCA and new regulation, there will be a lot more that is going to be done.
Fascinating, great. We all have a unity in calling for clarity and regulation in this call, which is excellent. Another question. There's been rumors, recent rumors in Austria of potential tax laws changing for Austria, especially in regards to the one-year holding period. Could you elaborate on that? I'm not sure whether any one of you knows any insights. Do you have any insights on that? Or what do you think about taxation for cryptocurrencies? Any opinions?
No insight, but the general media coverage goes that it might be into a cast, so to say, so that you have the normal rate apply. But the details are not yet known as far as I know. At least that's what I read in the newspapers. More than that, we are not involved. And other than that, if we would have been involved, we couldn't share it either.
What's your opinion on such regulation, if you have one?
I think it's like it has its pros and cons. On one hand, it brings together the two worlds because most of the people are using crypto as an investment service, so therefore it is okay to treat it the same way as you treat stocks and other financial instruments. But on the other hand, it of course was on very short notice, and it's still a little bit of legal unclarity. So all the holding period thing, I think it's a discussion which should be a little bit on more broader scale, but that's a different story. I think that's about how you want to make your laws and whom you want to ask.
Mm-hmm. Anything to add? No, we don't have any experts from the Ministry of Finance here, and they would be the ones giving you these insights. Florian Aschbacher is asking us how much crypto should an investor have in his portfolio? Most Bitcoin and Ethereum, right? We don't give any financial advice in this round. Maybe if anybody just wants to do some warnings, actually not to take a loan on your house and buy crypto because it's highly speculative. Obviously, maybe I don't know what's the opinion of Bitfund on that.
You shouldn't do that with any speculative asset, with any volatile asset. I mean, this is something you don't need to be an expert to tell that to someone. I think it very much depends on how much losses you can stomach. It's still a very volatile sector, and the FMA always tries to warn people from becoming too greedy. But this is, I think, from my point of view, this is very similar to other speculative instruments. If you talk about CFDs or things like that, so. We shouldn't put too much emphasis on the volatility of cryptos compared to other instruments. You should look at every instrument specifically and then make an informed decision. But that is something that is very hard to teach people to do.
Excellent. Maybe another
to add that, because a very important thing is that you actually really buy the assets you want, the Bitcoin, the Ethereum, and not some investment scam where you promised 7% at top of those from people who are not regulated in Austria. So this is something where I can give a clear warning to, that you really check, is this person, entity regulated? Do you find a warning on the FMA homepage? Do you find it on the Unternehmensdatenbank there? So these are things that are good practice and can help to reduce scam in the world outside.
Maybe if somebody can just give us a quick overview, in case you know that by heart, so to say, in this discussion. The question is here, what will new regulation bring? MiCA AML directive. Can you give us some insights, very high level, on what will change? Or is that...
Yeah, of course, I mean, if nobody else wants, I can go along with MiCA. So there will be a new regulatory subject called crypto asset service providers, which are basically similar to the activities right now, also regulated under the 5th AMLD, but also new activities will be covered. Of course, it's only a proposal, and things are going on. Maybe there's even more than now that is now visible in the proposal. And they will need a domiciled entity in Europe. They will need to apply for authorization within the national competent authority. And of course, there will be also new market abuse regulation coming into place with MiCA. And there will be new regulation for formerly called stable coins. Now it's called asset reference token and e-money tokens. And that would be the overview about MiCA, I guess. And of course, there's also new AML regulation coming into place. I think next year it's coming. It's the AMLR. And also the AMLD 6 is on its way, adapting slightly the AMLD 5. So that would be a slide overview.
Perfect. Thank you very much. Anything to add? Then we move to the next question. If you talk about blockchain, are you talking about private or public blockchain, central or decentral? Maybe just for understanding purposes.
Normally there are so many different technical setups. So when you talk about blockchain, you mean DLT and a real decentralized system. If you then talk about permissionless, or there are many things outside there, normally you mean all of the section. We will need to be more clear in the future if we talk about that. But yes, we include all of the blockchains normally in this discussion, I would say. Please correct me if you see it different from the panelists.
No, I agree. I think this is something that is only differentiated when you go into more detail in the discussion and talk about specific business models. Then, of course, you have to differentiate between public and private, and look at how the system actually works, because those labels are also not as clear as they sound or are made out to be, because there are, let's say, levels in between, which can be very relevant from a regulator's point of view. So we don't differentiate when we talk on a broad level, but when it goes into detail, of course, we do that.
Great. Another question from Artem Semenov. Why not go in direction where you will provide your own blockchain platform, crypto as well? Any opinions on that? Okay, then we'll skip this question maybe if we don't have an insight on it. I saw one more question regarding the competition. Maybe, Christoph, this is for you. In Africa, there's quite a boom for cryptocurrencies. They don't have a properly established banking system widely available. Is that a threat to banks?
Might be, but we need to look at the trend. I mean, if you compare it to the phone industry, of course, also in Africa, people didn't have landline phones, and started with mobile phones. Was this a threat to landline phones? Yes, but was this a threat to the mobile phone industry per se? No. So, of course, there will be a shift, but they also need to make their transfer payments. They need to stick, also their providers need to stick to regulations. So I think at the end of the day, that's a normal, natural development, but I don't think that it will be a massive threat.
And also an opportunity for the banks
as well. Of course, and what was, I think, also initiated or intended by the first question, of course, also banks need to develop. If any company leans back and doesn't want to develop anymore, of course, there is a threat that you can't follow up with the industry anymore. But if you are eager to develop, if you monitor the market, if you set appropriate steps, I think there is no risk. Or, of course, always risk, but a little risk.
Yeah. Loris is asking us, are new regulations expected to disrupt the crypto market on some level? Do you have some insights on that?
Maybe Christian, do you want to start, Christian?
You can go ahead if you want.
I think it is not the intention in most cases that this disruption happens. Of course, actors who already don't comply with existing regulation will have even bigger problems if and when MiCA comes. I think for already compliant companies, this should not be much of a threat. It should not materially change how businesses operate. Of course, overhead costs rise, and of course, some processes become a little bit slower because they're encumbered by regulatory necessities, but it could also provide a lot of benefits by professionalizing the industry. I don't think that it will significantly change how crypto business is done at the moment, as long as we talk about the centralized part of the crypto business. Of course, decentralized crypto business is a whole other issue, which I think we could fill a complete different panel with. But that are my 2 cents about this.
Christian?
Yes, maybe to add to that. What we also see is that some players around the markets are not really, they don't have a clear seat in Europe. They just offer the services via a homepage. They are not regulated anywhere. They don't have fiat access. They are somewhere in the, let's say, more tax-friendly havens. And I think this is something that will disrupt the crypto industry from this perspective. So if you talk about the crypto as a service provider, regulation will help those who follows the rules, that this is really increasing. That's the first thing. And then the second thing, and this is going to be very interesting, is how much the European Commission or the European Union will actually regulate the technology itself. Ralph mentioned Monero, for example, and there was discussion if, for example, like anonymous cryptocurrencies might be allowed in the future or might be banned, or what is going on. So there we could see some rather harsh developments, but that is not yet established or like expectable to see. I think the current proposal of the European Commission is walking a very good line between regulation and not changing the whole industry, but is a soft touch which is necessary to start with, and then we see where the regulators will go with that.
Maybe to finish the round, Caitlin, just let's have a look into the future. We started the discussion also with the tools and the function of the tools, not only the regulation when we try to mitigate the problems and the threats of using the cryptocurrencies. What do you think the future will bring here? Will this also be available to maybe other tokens, to other digital assets? Where do you see the future of these tools that can help us engage with the technology?
Yeah, absolutely. Chainalysis covers pretty much every major cryptocurrency asset, and we provide coverage of all assets to a certain degree. So yeah, as new products come out, new technologies such as DeFi, Chainalysis is constantly coming up with ways that we can help our customers confidently engage with these new protocols. So definitely think we'll continue to see expanded coverage there from a blockchain analytics perspective.
Perfect. We ran out of time. Just a quick final question from Jan Simko. What is the RBI's official stance on cryptocurrencies? I mean, from my perspective, you are indeed one of the leading bank engaging with these technologies, enabling nights like this. I think this is the third or fourth blockchain night already. We've been working with you guys together since, I think, 5 years on that topic. What's your official stance on that?
Our official stance is that we are very interested in technology and that we experiment a lot. We want to understand as much as possible, but we don't do any active business yet, at least outside of our customer base. So we experiment, for example, also internally. We had tokens to pay within our canteen and things like that. But as the regulation is not yet stable enough, from my point of view, we don't provide any services as to cryptocurrencies yet. Perfect.
Indeed, extremely innovative projects that you're working on, and it's always a pleasure to see those insights. Thank you so much. I know FMA has another appointment, so you have to run. Thank you for all those insights, also for the questions and discussion with our audience, for your questions as well. Thank you to this panel, and a big virtual round of applause for you guys. Thank you. We'll move on now to our next keynote. Alexander Eisel will have a keynote here in our LED studio, and I will move to the other studio to meet Gernot Bretenthaler there, Blockchain Hub Raiffeisen International, and Alexander Eisel is Chief Scientific Officer at Austrian Blockchain Center. Let me now move to the other studio, if I'm correct, and meet Gernot there. In the meantime, you will prepare Alexander for your next keynote. So we'll give some insights and maybe some comments on this panel that was there. Did you like it?
Yes, it was perfect.
Did you have any new learnings about the topic?
All the time.
All the time.
All the time. It's good. We on purpose put a very controversial panel together where we also learned a lot of how the different perspectives from the different entities looking on this cryptocurrency world are working out, and really a lot of insights. I'm very proud.
Thank you for these nice, also excellent questions from the audience. Thank you for engaging with us as well. Continue to do so, and I'll put your questions all the time to our panels. We'll have now a recap on coin tracing project, which Alexander Eisel, Chief Scientific Officer from Austrian Blockchain Center, will give us in 5 minutes, maybe in our outer studio. And then he'll join us here with Gernot to discuss the rest about these topics. And again, we'll take some of your Q&A. But now I think that Alexander is ready, and please, let's start.
So, welcome from my side. Thank you for the great introduction, and thank you for having me. My name is Alexander Eisel. I'm the Chief Scientific Officer of ABC Research. We're an application-oriented research and competence center, partly funded under the COMET initiative of the national government. Do you see my slides? Okay. And we are basically interested in all kinds of questions together with some of our partners. Now I see them as well. Thank you. With some of our partners, we basically run a consortium of several scientific and company partners. The scientific partners, some of them you can see on the slide here. Our company partners range from crypto exchanges like, for example, Bitpanda or Confinity, to traditional financial institutions like RBI. And I'm very happy to talk about this project that we started some time ago on coin tracing, so basically risk scoring of blockchain-based digital assets with a particular focus for compliance, which fits very well into our research program in several aspects. So we are very interdisciplinary, tackling questions ranging from really technical issues over to the business side, analytics, and also legal and policy implications. And this is interesting to some extent, obviously from an analytics perspective and risk modeling, but also from a blockchain analytics perspective, in the sense that you need to be able to efficiently track blockchain transactions and derive insights like they were discussed in the previous panel, with a particular focus for compliance. And as already has been mentioned, there are lots of legal and political implications. How should the regulatory framework look like in the future to be able to tackle these issues in more detail? To dive into the project in a little bit more detail, digital assets obviously require a rethinking or a new compliance process, or at least a lot of additional knowledge and information, especially for traditional service providers who have not dealt in practice with digital assets. It's a comparatively small but obviously rapidly growing market that is characterized by a lot of heterogeneity. So you have all kinds of tokens, from payment tokens to security tokens, utility tokens, which differ a lot in their characteristics and like from a design perspective, but also from a technical perspective. For example, you have digital assets like Monero, which focus on anonymity, which obviously has a big impact on compliance and anti-money laundering initiatives. It's also characterized by a very dynamic regulatory environment, like was already discussed in the previous session. There is a lot of risk using digital assets for banks, as we already heard from the head of compliance of RBI before, not because Bitcoin is necessarily used a lot for criminal activity, but obviously it can be. So just to name a couple of examples where digital assets can be used and risks arise in an AML perspective. So they can be the direct object of criminal activity, like hacks of crypto exchanges or wallets. They can also represent basically the cache lag of some criminal activity, especially if you think about ransomware attacks, encrypted hard drives where attackers request payment in Bitcoin or other cryptocurrencies. And they can obviously be a nice means of money laundering, trying to hide the financial gains from previous criminal activity. So for us, as I mentioned previously, this whole project fits very well into our whole research program. And so what are now the main research questions that we are trying to answer in this project? So first of all, it's a project that tries to increase knowledge and help our company partners to deal with these questions. And we already heard that there are data providers and risk models to be able to identify which transactions some can come from in particular sources, like mixing services that try to hide the original source of the funds, or that have been used in criminal activity like ransomware or terrorism financing or whatever before. And how can this blockchain-based information be interpreted? So this might sound easy, but if you look at it in more detail, it's actually quite complicated, because it can be many transactions in the past or a lot of time in the past. And the question is, how do you deal with information like this? One particular question of this research project is what data sources and risk models exist. So companies like Chainalysis, that have been part in the previous panel, as an example, are suppliers of information that allow you to classify transactions and get the information on the risk that could come from that. And there are also obviously some methodologies, statistical methodologies, that allow you to analyze blockchain data and derive information from that. And one of the questions of our research project is to answer how good are they actually, and how should this information be interpreted. So to summarize, what we try to do is basically learn a lot about what already exists and what needs to be developed for the future to provide decision support for especially AML compliance in this setting. And we are very happy that we can do this research project with partners like, for example, RBI and Bitpanda. With that, I would like to conclude my talk. If you have any further questions or are interested in the project, please get in touch with me. Thank you.
Or send us a question on Slido and we'll include it on the panel. Alexander, thank you very much. Come join us here. Gernot, how important are these research projects for you? How important are these research questions also for RBI?
Yeah, first of all, it has become a beloved tradition within this blockchain night format, not only to give a platform to these interesting topics, but also to build a bridge to our initiatives, to our projects. And we are especially proud that we can team up here with ABC and Bitpanda and run this research topic because it's a relevant one. If we hear Christoph from our compliance, he said on the one hand side, it's the regulations which is important for us. On the other hand, it's of course also the usage of these tools which are available and get to know these tools and really also be ready to evaluate these tools because they have different results from time to time. And this is the purpose, what we want to get out of this research. I think we have heaps of experience in especially AML compliance. We chip this in, but on the other side, we of course can benefit a lot of from the insights what Bitpanda are having and what they can bring in because they are really exposed to the cryptocurrency world. As we know, we are not yet. Maybe we can be that at one point of time. One thing is sure, if we want to be there, we have to have good coin tracing services also at our disposal and know how to use them.
How can you contribute to this ambition, so to say, and to obviously you cannot regulate, but in terms of developing tools and giving input on that side?
Yeah, so I mean, obviously we cannot regulate. So I mean, regarding regulation, we try to be an independent platform because the question was asked in the previous panel. So we try to bring industry participants, regulators, and researchers together to discuss that. What in particular we can contribute is research. So we are also partnering and have staff at our center that are able to interpret this data and run analysis and look at this and provide decision support for partners like RBI, what they should do with that.
Do you see many tools on the market coming to fulfill the purpose of coin tracing?
Yes, so we just did basically a market study which tools are available. So there is a whole range of different service providers that all have their advantages and disadvantages. So one purpose of the study actually is to find out what do they offer, and how can they be combined maybe for to get the best results out of that.
Could they contact you directly if there's some startups working on such projects? Are they welcome to write you?
Of course, of course. It's part of our daily routine to be in exchange with a lot of fintechs in this area, not only on the coin tracing side, but also on the smart contracting side, on the tokenization side, on the custody side. So it's part of our routine to speak with them, to learn from them, and maybe to find a joint approach for setting up a POC together with them.
And maybe the next question is maybe a bit stupid, but just for the sake of clarification, these tools are not here as an intermediary, so to say, source. As long as the regulation doesn't fulfill its purpose, they will remain there as a very important factor in the business, also when the regulation gets more advanced and clearer.
I see it that way as well, yeah. So we have the AML regulation already in place. The panelists have pretty much explained everything around it. They also have mentioned the travel rule. From my layman's perspective, I'm not a compliance expert at all, but I would say the travel rule together with a coin tracing service or several coin tracing service providers together should bring up clarity and safety also, that you can say that we are really moving away from just talking about the risks of this cryptocurrency world, but also opening up to the opportunities.
Are we talking about very near future? Are these tools, or how long is your project going to take?
The project, I think, is not something that has a definite end, maybe. But I mean, we structured it in phases. So the market study, we basically just continued. Now the question is to look at this in a bit more quantitative way, which we do over the next couple of months. But I think it's an ongoing project to look at the tools to develop models and derive insights from that. So it's we obviously try to have answers as fast as possible, but I'm not sure there's a time frame that I can put on that.
Perfect.
Yeah. Industry is progressing, regulations are progressing, as we know, so also the research is progressing. So it's a very agile but very good process.
I think my impression also from the first panel and from what you're explaining now is that collaboration is active on many, many levels. There are working groups with the regulatory organs and services. There are working groups with research institutions. I think it's a lot of collaboration going on the market, on the crypto scene. Would you say that?
Yes,
yeah.
I can really support that opinion.
Yeah, so I would agree with that. And I think it's also really important to have that collaboration.
Perfect. And events like this should embrace that as well and bring communities together to ask questions. We'll take a very short break, 5 minutes, and then we'll continue with our program from this studio. Stay tuned. We'll be back in 5 minutes, super short. And Christian Wolf will be with me in the studio before we start the next panel. See you soon. So, welcome back in our studio, and we have Christian Wolf, Head of Strategic Partnerships and Ecosystems at RBI, with me here again. Christian, very welcome back.
Thank you.
We'll give some insights now on the RBI Blockchain Hub. Very impressive team behind it, very impressive activities that you have. We haven't talked to you for a year. I mean, I didn't even realize that it's been so long. What happened in the meantime? What were your focus projects? Can you give us some updates?
Actually, we focused. We narrowed down our own funnel internally. Back a year or even 2 years ago in our first events, we discussed rather broadly about the application of blockchain technology in banking. We looked at various angles, also in trade finance, etc. But over the recent months, we saw the focus shifting towards asset management in particular, not solely, but in particular here. And we are looking now at the strategic impact that the application of blockchain technologies, but also the advent of cryptocurrencies, the tokenization of traditional assets has on the banking landscape. And what we look at the conclusions that we take for ourselves and where we want to play.
We've heard about the projects that you started, about coin tracing projects. Are there any other activities that you're planning?
I think when talking about asset management as a broader topic, we look at two different angles in general. The one is certainly is the new asset classes as Bitcoin or all the other cryptocurrencies that are constantly visible in the media. And the other part is looking at traditional assets, tokenizing them and offering them on a rather new blockchain-based distribution channel. I think also if you listen and followed the previous panel, there is a lot of unclarity on the new asset classes, but there is a better understanding already on the traditional side. And this is actually where we currently put our focus to. In addition to that, it's obvious that the underlying foundation, the technical infrastructure, is actually the same for both new and old asset classes, and certainly this is also something that we look into. So basically, answering your question, we look at what is needed to create an ecosystem that first allows us to issue tokens, so the issuance process. The second thing is on how to make them tradable, so it's the exchange process. To keep them safe, so it's the custody process. And thirdly, it's on how to exchange them potentially peer-to-peer. This is the payment rail process. And especially in the latter one, we will now have a very exciting panel coming on.
From the very beginning, I think this importance and role and super active participation of RBI in building the ecosystem around these topics was one of the crucial elements or jobs that or emphasis that you had. Does that remain also in the future? Are you going to engage with startups, with experts alongside of these topics in the future as well?
Yes. I think it's quite natural and obvious that all these undertakings are within a larger discussion of an ecosystem, of a partnership approach. And it came quite natural that we also took that responsibility together with our elevator lab that tries to bring in fintech knowledge, fintech technology into the bank. And certainly we also use that vehicle to better get a feeling on what's happening in the industry, identifying relevant partners and ultimately teaming up with them.
And also working with your banks across 14 countries where RBI is being active.
Exactly.
Are they still on the board of blockchain activity? I was always impressed how much input and talent you had across your footprint.
Sure they are. One must notice that given the heterogeneity of our markets, also when it comes to maturity, when it comes to legislation and compliance, there might be different approaches when you look into the details, but in general, we're discussing the same topics altogether.
Perfect. So the activity of the Blockchain Hub remains very high, and you're focusing on the topics that you mentioned.
Yes, exactly.
Perfect. Christian, thank you very much for all these insights. If anybody wants to get in touch with you, obviously you have your email there and your contact details, or just write us and we'll pass it over. These are the ecosystem builders, and that's what I really, really like about that. Perfect. So Christian already mentioned the next panel on the multiverse of payments. Obviously, we have cryptocurrencies, stablecoins, CBDCs, and we have very, very distinguished and a very good panel, which I will announce in a second. But first, let's have a look at the intro video for that.
The world of payments has been evolving rapidly over the last few years. Among the disruptors were developments in the blockchain area. In 2009, Bitcoin was born, and it enabled global, real-time, and low-cost payments without intermediaries. However, the problem with Bitcoin as a means of payment is that its price is extremely volatile. That's why stable coins have since appeared. Stable coins are based on blockchains, just like Bitcoin, but they're tied to commodities or fiat currencies, like the US dollar, which make their price, well, more stable. Examples of stable coins include Facebook's Diem and the currently very popular USDT and USDC. Their success has been a wake-up call for central banks to start research and projects on their own digital currencies, or so-called CBDCs. According to the latest BIS report, 86% of central banks are exploring CBDCs, with many projects running all over the world. While some CBDCs are already live, others are still in pilot or research phases. The digital yuan will be trialed at the next Winter Olympics, and the ECB is starting a 2-year investigation phase for the digital euro in October 2021. But also traditional players and networks are carefully observing the trends and innovating in order to improve traditional systems which are not based on the blockchain. How can these means of payment and payment networks work together? And what does the future of payments look like?
Great, thank you very much. And I'd like to introduce our panel now. With me in studio, Kurt Tschada, Head of International Retail Payments and RBI. Welcome.
Thank you very much.
And virtually with us, Alexander Bechtel, Head of Digital Asset and Currency Strategy at Deutsche Bank. Alexander, very welcome. Then we have Patrick O'Donnell, Vice President and member of Blockchain and Digital Asset Team at MasterCard. Patrick, very welcome. And last but not least, René Pomasl, Co-founder and Chief Executive Officer at Salamantex. Welcome. So we've seen a very good video explaining some basics, and let's stick to that. What are CBDCs? What are stablecoins? Who wants to give us another perspective? Maybe Kurt, do you have another view?
I'll let you guys start first.
Come on,
right?
Who wants to start?
Okay, let me give it a try. And I actually liked the video a lot. So that was a really nice video. So maybe let's start with central bank digital currencies. And defining this term is a bit harder than it seems, because in order to understand what a CBDC really is, it's necessary to understand our today's monetary system. So I think what's really important is to make one difference. We have two forms of money today. We have central bank money, which is cash usually, so physical cash banknotes, and we have commercial bank money. That's the money on your bank account. Now, for us as an end user, as a retail client, we can only use central bank money in a physical form today via a banknote. And what central bank digital currencies try to enable us is basically to use central bank money in a digital form. And what's really important to understand is that a CBDC is not necessarily immediately on a blockchain. It's really simply making banknotes available in a digital form. This might be on a blockchain, but it might also not be on a blockchain. And this is why it's also important to distinguish a CBDC from a stablecoin, which is always on a blockchain, right, by definition. So let me maybe stop here.
Okay, perfect. Do you welcome the fact, if I got it correctly, that 86% of central banks are kind of examining whether they should engage with CBDCs? Is that a good development? Or does it surprise you? Is it a lot? Is it little? Any comments on that? Alexander.
Yeah, I mean, it has increased quite swiftly over the last 1, 2, 3 years, so which is impressive at first. And I think it was totally right what the video said, that this was mainly driven by the Libra, now called Diem announcement, this white paper in June 2019. And I think it's a very positive development. It's necessary that central banks think about how to kind of further develop our money. We have this new technology called blockchain. We have new possibilities. I think central banks should think about whether it's possible to use this technology in order to kind of bring the money to the next level, so to say, that they're offering.
What kind of use cases are we going to see with CBDCs and stablecoins? What kind of use cases do you anticipate, Kurt?
I mean, from my perspective, I think it's still early days to say, right? There is niches in terms of merchant classes or shop classes that were used. I personally see there's the whole digital asset topic is going to play a big role in the loyalty space, right? So we see dedicated loyalty coins coming up, right? And that whole system of cashback. So I shop somewhere, I get money back. I think that's going to change, right? That's something. And from my perspective, I think the nearest use case is definitely going to be the person-to-person money sending. I think this is good. This is going to change totally.
René, you guys do technology. Maybe you can pitch it better than myself on point of sale for the retail, for example, where they can pay in cryptocurrencies. Where's the relevance for you of this topic?
Yeah, actually, CBDCs and I mean, I saw the question in the invitation of the panel, and it was quite interesting. The question: Can CBDCs, stablecoins, coexist with cryptocurrencies? And I totally agree on that. I think it's a positive. It's very positive now that central banks are thinking about digital currencies, especially when it comes to technology. I totally agree with Kurt. There will be there will be a big shift in how we pay in the future, and with technologies like central bank digital currencies, stablecoins, or any kind of cryptocurrencies. I'm pretty sure we will see, especially on the POS side and on the e-commerce side, we see a lot of changes on the behaviors of customers and merchants. I mean, I will come a little bit later to that when I give you more insights on some other stuff.
Patrick, what's your take on that?
Yeah, it's an interesting one, right? I think with CBDCs, splitting the two, so CBDCs first, and I agree with Alex, you need to kind of, the terminology of this is all very, very important. Even at a CBDC level, I mean, you can have a wholesale CBDC, you can have a retail CBDC. I think there's a multitude of use cases at the wholesale level that need to be explored. And I think, first of all, I think if you're going to have a CBDC, I think the wholesale is the starting point. I think that has to be there as a substrate before you can have a retail CBDC built upon that. But I don't think there's going to be a one size fits all in relation to CBDCs. I think countries will take very different approaches. You look at China and what they're doing at the moment, and Alex mentioned the use of blockchain or not. I mean, there's an example of not. And I think they're very focused on providing a domestic payment solution that is not necessarily as in private hands, right? In some regards, and it's look at where Alipay and WeChat got. I mean, if you look at Europe. Europe is driven very much by a sense, I suppose, of European nationalism to a degree, and creating something that doesn't necessarily have to rely on payment systems elsewhere. So I think it's going to be there's going to be, and even if you look at what happened in the Bahamas and the sand dollar, it was very specific in relation to the cost of actually moving physical cash around multiple islands, and the sand dollar was a response to that. So I think there is a lot of drivers and objectives for CBDCs. I don't necessarily think you're going to see every country launch a CBDC. I think it is in line with what the guys have said as well. I think it's great that central banks are experimenting with this, because the technology and the concept of digital currencies or digital assets is out there now, and the world has to evolve it and meet that. I think on the stablecoin side of things, and I'm not a massive fan of the phrase stablecoins, to be honest with you, because it covers a lot and gives an impression that maybe isn't 100% accurate in all cases, even to some of the ones that were called out in the video earlier. So, but I think, look, clearly that's a private level delivery mechanism, and I do think regulators, central banks are now looking at, driven by DM and Libra and what they were doing, are looking at the requirement for regulation in this space, and to make sure that you have the right protections at the consumer level, or even at at the financial system level as well, that you don't create risks that don't need to be there. So I do think we're at a very, very early stage in both the public and private side. And I think it's going to be very interesting to see how that evolves. But I do think you are going to see countries launch CBDCs. I do think stable coins in whatever form will continue to exist. I just going to think there's going to be a lot more regulation around this space overall, which I think is welcomed by probably most people in the industry.
Let's have a quick check. Do you all welcome the regulation that Patrick mentioned now?
I would definitely agree. Yeah, it provides guidance and clarity, I guess, to every market participant.
Alexander?
Yeah, I mean, it's important because it enables like us as banks, for instance, to enter the space, because without regulation, it's just impossible for us. And also, of course, for the end user, and the end regulation is usually a positive thing.
Yeah. René, what's the take of a startup, for example? Do you agree on that?
I totally agree. I mean, regulations are unnecessary, right? I totally agree what Patrick said. We don't know yet what kind of digital currency or digital asset in the future will be present in whichever region, for example. I mean, we talked to central banks which are just looking at the CBDC as like a cash alternative. But on the other side, there are central banks which are looking actually to develop a whole network, which is, we like to call it programmable money, so that you can offer a lot of other services as well. And I really like what the other panelists said at the beginning, and especially what the FMA said at the beginning on the other panel. It's very, very difficult, and I think it will still take a lot of time to regulate CBDCs, stable coins, or cryptocurrencies. So it's very interesting what's going on in the market, and I think we still don't know what will gonna happen within the next 3 to 5 years.
Do these new payment methods offer new opportunities? Are they threats? I don't know, Patrick. How does MasterCard go about that? Do you welcome new possibilities? Do you see opportunities for you there as well?
Yeah, look, I think at this stage, what I will say is the genie is out of the bottle at this stage, right? So regardless of how you feel about Bitcoin and other cryptocurrencies and where you view that spectrum, whether you think it's the most amazing thing in the world or whether you think this is going to lead to financial ruin like 2008, I think the technology is out there. And it's not related just to cryptocurrencies, but the technology has got huge uses. I think the innovation and concepts are out there. So it's how do you evolve with those, right? And how do you evolve in a very dynamic and evolving world, right? And I think the greater clarity around regulation, as we just touched on, is going to be a good thing. And I would be surprised if you ever get anybody on a panel that will say that no, regulation is terrible on a panel like this, or else, it'd be an interesting conversation. But so from a MasterCard perspective, we're trying to evolve with this world as well, but we're trying to do it in the right way. We're trying to do it in a way that protects our customers, that protects our brand, that protects the end consumers. And we are exploring many things. We have, a card program out there where we will work with exchanges and bring them on board with MasterCard and allow them issue cards and use those card at acceptance points. We're exploring what it would mean to support stable coins on our network as a currency. Now we're not there yet, but we're exploring these things. We are exploring CBDCs. We have a sandbox that we are working with a number of central banks to test out the concepts. One thing I will say is, and I think everybody's, particularly incumbents, particularly banks, particularly the likes of the MasterCards. Renee, you're less so for yourself, right? You're coming into this new, but I think we're evolving with this. We're still not sure exactly how we're going to fit in this world, but we know we have to be there. The world is changing. We have to be in the middle of that, and it's important that we do so. The one thing I will say is, whatever way this evolves, I think the two things that are most important for MasterCard outside of the regulation piece is interoperability and certainty. You can't have fragmentation of payment schemes and systems. If you have that, if that continues to be the route we go, then we're just going to be in the same situation again in 10, 15 years' time. So interoperability between payment systems, currencies, what has to be there and has to be the central focus of everything. And I think what the BIS, for example, are trying to do, it makes 100% sense. It's not going to be easy, but I think that's where it's got to be, and that's front and center for what we do and everything we're thinking about. And the other thing is we have to make sure that we're protecting our customers and our end users, i.e. the consumers, in everything we do. So that's front and center from MasterCard.
And probably you see a lot of space for technologies and solutions that will offer interoperability of different payment methods.
Yeah. That's the yes. I mean, if you look at, we'd say, DLT and blockchain overall, it clearly has a huge amount of benefits in certain use cases. Do I think every payment scheme, i.e. MasterCard's core rails, do I solely think we're going to transfer those into onto blockchain or DLT? No, not necessarily. Do I think every RTGS or clearing scheme in each country is going to be a blockchain-based one? No, 100% not. But I do think you're going to see where it makes sense for it to be. Yes, that's the case. And also it's then how do you interact with the blockchains that privately issue currencies are going to be available on. So I think it's how you bring these things together are the important things. And then on top of that is the services that everybody can add and build on top of those. But as its core, as I say, I think it's that substrate of interoperability, making sure we don't have fragmentation is critical.
Alexander, can you see cryptocurrencies? Do you see cryptocurrencies being used as means of payment? What's Deutsche Bank take on that?
So I'm not sure if it's Deutsche Bank take. I will give you my personal take on that. And I'm pretty skeptical, to be honest, for cryptocurrencies to be used as a means of payment. And I can give you two reasons for that. The first one is a technological reason, and I would mainly focus now on Bitcoin. Right? I know there are like 10,000 different other cryptocurrencies, but it would take us 10 hours to go through these and distinguish them. So let's focus on Bitcoin. And I think there are two reasons why I'm a bit skeptical for Bitcoin being used as a means of payment. The first one is a technological reason. As you probably all know, the Bitcoin main layer does not scale, right? About 7 transactions per second are possible. And that's by design, and that's a feature and not a bug, right? This is how Bitcoin works. So if you want to use it as a means of payment, you would have to build something on top, right? So kind of a second layer solution such as Lightning, which is still in its infancy, which might work in the future, but that's really early days, I would say. The more important reason why I do not believe that, or I'm at least skeptical about Bitcoin being used as a means of payment, is more an economic reason. Because as long as we have the euro, the US dollar, etc., we will always prefer to spend these currencies. And why? Because these are, compared to the Bitcoin in particular, inflationary currencies. Right? So if we believe that Bitcoin works and we in 10, 15, 20 years, Bitcoin will still be around, Bitcoin will be deflationary compared to a euro or a US dollar, which means basically that Bitcoin is very, very good in being a means to save, to store wealth, right? And if I have in my pocket €1 and 1 Bitcoin, or like let's say 60,000 euros or 1 Bitcoin, I will always prefer to spend the euro, because I know tomorrow probably my Bitcoin is worth more measured in euro than it is today. So I will always spend the euro and the US dollar and keep the Bitcoin. And this is why I believe if Bitcoin turns out to be really working, it will be a perfect store of value, but it will not be used as a means of payment.
Unless the person doesn't use anything else but Bitcoin and gets paid in Bitcoin. Do you see that coming?
That's exactly it. But you would still have to explain to me how we get there within the next 10 or 20 years. I don't know what happens in 100 years, but I don't see that in the next 10 or 20 years.
I have to connect you with our Nico Jilch. I think he has a certain opinion on that. How do you see that?
I mean, my view on the topic is I would share a lot of what the colleague said. I, however, think that we should not forget the consumer, right? And I would compare it like, do mobile payments, does Apple Pay, does Google Pay take off, right? years ago, banks said, "Oh, we never think about tokenized cards, and we want our cards, we love our cards, and who needs that?" Customer pressure gets so big, right? And customers tell you what you want, what they want, right? And I think, as I said, this train has left the station. There's no way around it. And I would say in the next couple of years, we're probably going to see some niche use cases. Again, as I said, if you look at what Facebook does, this moving assets cross-border, moving value cross-border, I think there's a lot of potential in that to simplify it how it works. I mean, the likes of Western Union, MoneyGram, or whatever, they took like hundreds of years to build networks, right? This is, from my perspective, all in big doubt, right? Will cryptocurrencies be means of mainstream payments? I would fully agree in the next 10 to 15 years, probably not. But as the colleagues from Salamantics well know, right, there are niche use cases where I think customer pressure is going to be big. And there is going to be one that makes the first move.
But René, can you give us some insights on that? That's an interesting point. You have data on that. Where are these niches? Who are the people who want to pay with cryptocurrencies, and is that the mainstream?
Yeah, that's exactly. I totally agree with Kurt. I partially agree with Alexander on that case. I think we already crossed the point in adoption rate in many countries. So I think we have to look at it from a different perspective, because Europe, for example, is well developed. We have a well developed financial system. We have card payments let's say almost everywhere already in cities. But there are so many countries out there, and I travel a lot, and we got a lot of requests from different regions of our planet. It really depends in which area you are. So basically, it depends on the regulations in that area. It depends if there is a financial system which you can actually use or trust. Yeah. Because one of the biggest thing is the trust. So I mean, we heard it in the last panel, Africa. Yeah. There are a lot of countries where people actually don't trust banks or don't trust central entities. And especially in that countries, Bitcoin is a huge thing for payments, really a huge thing for payments. And I traveled a lot to the Middle East, to Asia, and especially the unbanked people are using cryptocurrencies a lot for payments. And actually merchants in these particular countries are looking for such solutions like Salamantics offers. And I totally agree with, it all depends on the customer as well. And if it is the Bitcoin in the future, we don't know. If it is another cryptocurrency, we don't know. If it is but it will be a digital asset. I mean, there are lots of studies. I mean, it's underlined by so many studies already or reports. And I think, I mean, from the big fours, big 4, 5s, also from my colleague Patrick, I read an interesting, I mean, from your company, I read an interesting study about the transition to digital assets in the future, especially in the younger generation. So I think it's not only depending on what we think. We are living in a world where social media has a huge influence. That's why, obviously, Facebook tries to do business in that area as well. But also, the world will be digitalized, and all these services. I mean, Christian Wolf said it at the beginning, and I really like that. There will be lots of other services related to cryptocurrencies or CBDCs or blockchain technologies like loyalty, cashback systems. And I think I totally agree with, we have to look at what the customer wants. And we got actually back to the question, we got actually a lot of requests from merchants, higher value merchants, like let's say car dealers. I mean, there was a special case which we just advertised, where a customer bought an Aston Martin in Vienna with cryptocurrencies. He insisted he wanted to pay with cryptocurrencies. He saw that on our website that this merchant actually accepts cryptocurrencies, and he really wanted to do that. It was a huge effort because of all the AML stuff we had to do. but actually he bought it, and because of that, many other car dealers came back to us. And it's not only car dealers, it's electronics like laptops or smartphones. And we actually have a huge pipeline full of merchants which contacting us and says, since 3 years ago, everybody's coming to us, want to pay with Bitcoin or other cryptocurrencies. Can you make it happen? Because we don't know how to do it.
I get that's the pressure from the consumers that you just mentioned.
I agree. Yeah. I mean, customers going to tell us.
Customers going to tell us. We have a lot of questions in the chat, so let's go through some of them maybe quickly for the beginning. Isn't Stergios is asking, isn't the crypto as a payment question already an old question now that we have a country like El Salvador? What's your opinion on that?
I'll take a shot at that one because I think it's nuanced and in relation to the previous question as well and what Rene, what you were saying. So just on the car dealerships, and I will touch on the El Salvador thing as well. I mean, would be interesting to see how many of those car dealerships are holding the Bitcoin once they get it. Are they converting back out? So because I would largely agree with Alex on this one as it stands, but I think there'll be a world of both. And even if you look at El Salvador, and I was looking at this actually this week and speaking to people on the ground in El Salvador, you know, there was a glut of transactions in Bitcoin at the start, where the government issued Bitcoin into people's wallet if they downloaded the Chiva wallet, and then they very quickly, a lot of transactions, people cashed back out, and now everything's back in dollars again. So the actual volume of transactions in Bitcoin has dropped massively. So I think it's very nuanced. I think it's too early to say, to be honest with you, whether cryptocurrencies will be actually used in a means of payment and in what form. I mean, do we, if CBDCs are issued globally and they're easier to use, will they be used? Does it bring the risk of dollarization across the world? I mean, do I want to live in a world where everybody pays everybody in Bitcoin and there is no and how do you manage? I don't think we're ever get to a stage where it's one currency globally, because I think there's the world is the way the world is, and there is going to be interests in national countries, borders, etc. that exist. So I wouldn't see that happening. But do I see a world where you're going to have options? Yes, 100%.
Okay, Veselin is asking a bit of provocative question. In 2030, individuals will not have bank accounts, they will have crypto wallets. How likely is this future to materialize? Alexander, maybe, and Kurt?
Yeah, so I think it's totally fair to say that they will have wallets instead of bank accounts. I don't think they will have crypto wallets. So you would have to tell me what exactly you mean by this. And this is also linked to the question you asked before, because I'm totally in it if you say we're going to make payments with tokenized form of money, which includes stable coins, which includes CBDC, which includes maybe a tokenized form of commercial bank money. So something like a tokenized deposit, so to say. I'm totally in it for that. What I'm still skeptical about is whether we do this with cryptocurrencies, but I like the idea of having a wallet which enables me to do a payment with a CBDC, a stable coin, a tokenized deposit, or a Bitcoin if I would like to. And I strongly believe into such a system. I think 2030 is too early, unfortunately, but I see us going there at some point in time.
But tell us, what is in that scenario that you just mentioned, what's the role of the banks?
Well, first, sorry, go ahead, Kurt.
So from my perspective, I think the role of the bank, and very personally, is if we want to keep these customer relationships, right, you need to give them freedom of choice, what they want to hold, right? And if you look at the success of Revolut, right, there is a lot of freedom of choice, what customer wants to hold. And I would argue we need to give customers the same freedom of choice, what they want to hold, how they want to spend, before we potentially lose them. I'm totally with Alex that I think, is this a crypto-only play? I don't think so.
Okay. I think I'm having myself a tone problem, so I'll be loud and hoping that people can hear me from your phone. Maybe you can pass the question to Alex as well, if you can hear me.
I can hear you. Yeah, so no, I totally agree, and I still there will be a role for banks to play. And as I said, banks could be those that offer these wallets, right? Banks to still have the client relationships, and banks would also provide this tokenized form of money. So what banks are doing today, banks are the main provider of money today, like commercial bank money in Europe makes 80 or 90% of M2 of the monetary aggregate. That's money provided by the bank. And why should that differ in the future? So it could still be the case in the tokenized economy that banks are the main provider of means of payment by simply, instead of offering their money in a bank account, they offer it in a tokenized form in a wallet and making it available for different kinds of use cases.
Perfect. So I hear that my microphone is working, and I guess yours wasn't working. We'll just change the microphones in a second. Thank you, Alexander. We have another question here. Do you know about whether, maybe this is not like a payment, but let's take the question. Do you know about whether any borrowing in Bitcoin exists in the market? And if so, whether any interest rate in the market as it has? It has. Borrowing, topic that we don't want to touch upon, or do you have any opinion on that or insights?
I mean, there are banks which are actually offering such products already, from what I know. But I think that's not our topic here.
Perfect. How can it be more easy to pay in crypto? Customer pays in, for example, Bitcoin, and the retailer earns dollar, euro, etc. On and off ramps are important. So how can it be more easy to pay in crypto is another question. I guess, René, that could be your pitch now.
Actually, our system is already quite straightforward. I mean, for those of you which know Salamantex, what we actually did is we created the software that cryptocurrency and digital asset payments are available on traditional POS machines. So for a customer, it's just easy. They come with their wallets to the merchant, scan the QR code, and basically the transaction will be done via the blockchain. And the merchant can decide if he wants to keep the digital asset in his own wallet or if he wants to get them exchanged to his bank account. So this is already quite easy, but there's still a lot that needs to be done regarding all kind of digital payments, I think. I mean, I totally agree with Alexander. In the future, we will all have wallets. We will pay with our wallets. I don't agree with that only banks will offer that solutions, but in the future, it will be with wallets. And I mean, MasterCard is also working quite straightforward, and I can only confirm what Patrick said. That there is a need to drive the user experience flawlessly. So right now it's quite difficult sometimes. But I mean, I'm here in the Middle East right now, and I saw how people are using cryptocurrencies and how difficult it actually is. But there will be other things in the future. I mean, I saw bio implants. I just went to the Chitex in Dubai last week, and I saw payments via face recognition combined with some kind of PIN codes and all this kind of stuff. So the future of payments is quite exciting. It's already quite easy to pay with cryptocurrencies, but for sure we have to deal a lot with the user experience and with the infrastructure in the future so that we can actually make it happen that we reach a certain amount of an adoption rate in Europe. Yeah.
I mean, Kurt, we were talking about, you stressed out that the customers will, so to say, force you to adopt accordingly. Will they even realize what kind of system is in the background? Will you integrate this blockchain payment system into your current traditional systems?
And that's exactly the point. I think customers per se, and that's for a payments guy, had to acknowledge they don't like paying, right? I mean, paying is a necessity and it should happen in the background, right? And that's why customers will not care about technology. Customer cares about ease and about ubiquity. And I think one of the big achievements that MasterCard made over the last 50 years is interoperability, right? And as long as we can give security and interoperability, customers will not care about the technology. So I think that both on the merchants and on the consumer side, as I said, customers will drive, and whatever technology is needed in the respective, form of payment, it is something that we will have to adopt, right? Because if we don't do it, I always say someone else will.
Someone else will. We have 2 more questions here. How can we, the consumers, trust in stable coins to be backed properly? There's recently been speculations in regards to Tether, and it's not really clear. Any opinions on that? Trust in stable coins.
Yeah, look, I'll jump in on this, given I mentioned it earlier on. Look, I think that's key, and this comes back to the regulation point that we all agreed on earlier on. There is question marks and very legitimate question marks, I think, around the backing of certain coins. I think for the world outside of, I suppose, us that live in this bubble, this ecosystem, which is an echo chamber of digital assets. I think we are aware of all this, but if you want broader adoption of these type of assets or currencies, I think transparency is critical. I think regulation is critical. I think consumer protections are critical. So if for stable coins, and there's talk of certain stable coin issuers becoming regulated like banks, and that's maybe where it has to go, and you have to have the insurance mechanisms supporting them. So again, back to Kurt, what you were saying, like nobody wakes up in the morning looking to make a payment, right? It's the end of a process. It's the end of something that happens. Nobody likes making payments. I certainly don't like making payments at any stage, but I have to. So it's got to be seamless. You've got to not even think about it. If you're having to think about which currency I'm using, what coin am I using, is this safe, is it not safe? You're not going to use it, right? So for that to happen, it has to be completely seamless. You shouldn't even have to think about it.
When the whole kind of fintech era started, we were guessing and talking about fintechs being the ones disrupting the banks, or banks being the ones buying the fintechs. What came out was a collaboration between the 2 worlds. Is that something that we're going to see in this crypto space? Are crypto startups going to be, let's say, your technology partners for integrations of these payment systems? How do you see the future from your traditional perspective? Maybe Alexander, for Deutsche Bank.
Yeah, definitely. So I'm also a big proponent of this partnership idea, and there's no way around it. I mean, for instance, if you now as a bank want to build something like a custody solution, let's say we want to offer our clients to custody Bitcoin or Ethereum or Ether, there is so much kind of technology and cryptography and stuff involved we only partially deal with as a bank. It's totally natural to say, let's bring a partner on board. And there are great kind of startups out there which can support banks in doing that. Or similar to what René is doing, right? A payment provider that just enables us as a bank to offer to our clients to accept digital currencies. So it's definitely a partnership game.
Kurt?
I 100% agree. I think especially in fintech as a whole, payments is probably the most proven thing, that there is no winner takes it all, and it's all about working together.
Patrick, MasterCard open for this collaboration?
Well, 100%. Again, similar to the regulation question, I don't think you're going to find anyone on this panel that would disagree with that. I think it's got to be frenemies on this one. Everybody works together and makes it work. And sorry, just this comes back to the interoperability and fragmentation point again as well. If we don't, then we end up with a hodgepodge, and then nobody wins.
Perfect. I think you guys have to run. It's almost 6 o'clock, 1 minute, so we were able to close on time. Thank you for all those insights on the multiverse of payments. I'm excited to see what the future will bring here, and I'm sure we'll report about it at the next RBI Blockchain Night. Thank you, Kurt.
Thank you
guys
very much.
Thank you, everyone.
We'll now move to our other studio for a wrap-up. Wirt Rieber is waiting there for me, Blockchain Hub, Raiffeisen Bank International, and he'll help me to give a short recap of this second panel discussion. With what were your takeaways? What did you hear?
Sure. I mean, Dan, you heard that Genie is out of the bottle. So there's a new kid on the block, and this is blockchain, which will, to some extent, disrupt the industry, the payment industry. But it's still a highly complex topic with rapid developments. And my learning from this panel discussion was that not only one solution will prevail. We've heard also about the legal tender in El Salvador, for example. They have some specific challenges there. So these are mostly cross-border payments, remittances, and high fees connected to that. And one of the panelists already said that in Eurozone, for example, we don't have this problem. So maybe here Bitcoin would not make so much sense as it makes there. And we also always like to see what the challenges are and then find a solution for that and not rush into just one solution.
Where do you see the future of payment? I guess you're kind of a target audience who, according to your age and so to say, if we take the general kind of KPIs, where do you see the future from also your personal experiences that you want to have?
So I think that we also heard from the panel that the most important thing is the customer. So what we see as the future and how we perceive this payment, and be it on blockchain or be it in a traditional way, we just have to, at the end, the customer is the most important thing.
You know, last time I was talking with somebody like I think Alexander was saying that Bitcoin is slow for transactions and so on and so forth. And I was kind of explaining that as well. And he said, yeah, well, we'll be using Bitcoin for payment. And I said, well, but it's slow for payment. And then he said, take out your mobile phone, download the app, I forgot which one it was. And with the Lightning technology, he transferred 10 euros converted to Bitcoins into that wallet of that app in a millisecond. And that felt kind of convenient. And I thought to myself, well, this is a very good means of payment. Is that something that will convince the consumers, do you think?
Yeah, sure. But then let me ask you a question. So if I want to transfer you money with my normal bank account, I think we can also do the instantaneous payment. And you see also if you have some other banking apps, I believe that you can do it the same. So here we really have to then see what are the main challenges that we're tackling. And if blockchain is appropriate technology for that, this is yet to be seen.
And as far as I could understand, also Kurt, it is an option for you guys to integrate such solution into your payment processes without the consumer knowing. Was there Lightning behind it, or was it some kind of non-blockchain technology?
Exactly. We were also experimenting on several fronts, let's say. And one of the experiments was also Raiffeisen euro-backed stable token, or REST in short. And here we created an internal stable coin, and this was used for our employees to be able to pay in the canteen for their lunch, for their coffee, and just experience how a blockchain-based solution would work. So here we had two main goals. The first one being this to give users, to connect them a bit more closely to the blockchain technology, and to see how the wallet works, how they can transfer the token or pay with token. But on the other side, we also wanted to see for us, like for Blockchain Hub, what we can learn from that. So how the processes could work and where we can connect blockchain and what are the legal challenges also related to that. And I think that we've got a lot of learnings that we can also apply to other use cases.
How was the acceptance of your audience? Did they just perceive it as a game or a project or something to pilot, or could they imagine using that?
So at the beginning, I think it was perceived more as an experiment, but at the end, we had more than 860 transactions in the volume of 2,500 euros and around 100 active users, despite the fact that we launched last year in July, so we had a long period of basically home office. But still, we're satisfied with the results. Also, the feedback from the customers was really nice.
What did they say? What are the key learnings, maybe?
So yeah, some of them said that maybe this is a bit slower than the traditional methods of payment in the canteen, but still, at the end of the day, this was an experiment, so not a production-ready solution.
Did you try it out yourself? How did it work?
Of course. So you can top up, you have to have an app, and you can top up the tokens from you have to transfer the money from your bank account to specified account, and then you get tokens basically on blockchain. And in the canteen, you just scan the QR code, and voila, it's paid.
But it's interesting. Why did they perceive it as a slow version? Because if you pay, Google Pay, Apple Pay, you also have to kind of unlock your mobile phone or do some face recognition and pay.
Yeah, it takes a couple of seconds just to scan this QR code, and then the transaction is approved. So this part was a bit slower than a regular part, let's say.
What was the purpose of the project, or let me rephrase it, what's next? Are you going to upgrade it? Is it moving on?
Yeah, sure. So as I already mentioned, we started this last July, and now in September we ended it because this was a project always meant to be just to run for a specific period of time. We've learned a lot, as I already said, and we are already somehow brainstorming, collecting ideas what we can do next, so how we can upgrade this system, but also add some new features. And I believe that next year I will be able to report some more.
Okay. Also on this project, you collaborated, I think, with an external provider. So I guess also for your internal projects, you invite the startup and crypto community to, I don't know, contact you and implement projects together.
No, sure. I mean, I believe that already Christian before said what's the importance of partnerships, and also as the name of our department, strategic partnerships and ecosystem says, we put a lot of focus on this, on the importance of partnerships. And here we collaborated with the Viennese company, Zero BS Network, and they helped us with the implementation on blockchain.
Perfect. Do you consider this project to be concluded, to be completed?
Yeah, this project is now completed, but as I already mentioned, we are already collecting ideas and basically planning the next steps.
It's always a pleasure to kind of talk to you because you're genuinely excited about the topic. Did you listen to the first panel as well?
Yeah, I did.
What's your take on the whole question of regulation and should we speed it up in order for you guys to be able to have legal certainty to get involved and with cryptocurrencies in general?
Sure. I mean, also our stance is that regulation is really important, as we've already heard also from our head of compliance. That this is something that we need, this legal certainty to make the first steps in this direction. What we also see that regulation is different in different countries. So here we're creating maybe a bit of uneven playground for different countries. But still, we support the regulation. In the meantime, we experiment. So when the regulation comes, we'll be ready to switch the live mode on and then to launch some projects.
I think these were the perfect final words. If there's nothing else to add?
Yeah, I hope the audience enjoyed our program, our panel discussions. I hope you've learned something and also collected some interesting insights. Our mission is also to educate people on blockchain-related topics because this is a new technology, and also to bring some use cases to the live stage. And you can always contact us with ideas, questions, suggestions, us as Blockchain Hub. And if we don't see or hear each other, we'll be back next year with the new edition of Blockchain Night.
Latest next year with Blockchain Night, but maybe some satellites also before that.
Sure.
One question I'd like to ask you still. You said that you used Raiffeisen coin for paying in your internal project. Do you use cryptocurrencies to pay in real life as well, if it's not confidential?
No, I do not use them to pay, but I use them to hold as they, or hodl.
And can you imagine paying with cryptocurrencies in the future?
I could imagine that, yeah.
Okay, perfect. That. Thank you, Vid. Thank you very much. Thank you for all those insights. That's it. The RBI Blockchain Night 2021. Super excited. A lot of learnings that I take with me. Hopefully you as well. Thank you for being with us and see you at the next RBI Blockchain Night next year. Thank you and goodbye.